Hello, I'm not sure if everyone can hear me. Please do chat in the chat box if you can hear me. Hi. Okay, Shalini, I'll pull you in now. Give me a second, everyone. Shalini, are you calling in or are you actually, I don't see you on the list. I see you here. Hi, everyone. Not ignoring everyone, just waiting to try to get all my participants in order. You can hear me, which is great. Now I'm trying to promote you. Why is it that I can't see you on the list here? Oh, there we go. I needed to scroll down. All right. Oh, it's as if I'm new to this. Okay, Shalini, you have to unmute yourself in the video. There we go.
And hello.
Hello. I was I'm looking, I'm like, why can't I see your name on this list? But I see your name in the chat box. I just needed to scroll. Just,
That's okay. That's
scroll.
okay.
How is everyone? Please let us know what city you're from and how you're doing. Hi, I'm seeing Florica, Jadine. Hi, Jadine. Laura, Michelle. Let me scroll. I don't want to butcher anyone's name. My apologies. How has everyone's day been? I can tell you mine's been hectic.
Not hectic. Life of an entrepreneur.
Let's just say I wasn't getting one of my emails for the past 2 weeks. And it dawned on me like yesterday, but it really hit me today where I was like, no, seriously, you have not been getting emails from this email address. Yep.
My kids are sick.
Oh,
so that's fun.
Mm.
So grandparents to the rescue. They took them, and my husband's in Michigan for work, and I didn't know that. Like, this was a last minute trip. So it's like, okay, I have a webinar at 8. 2 kids who are going to be unattended. Here, Mom, you get to have a sleepover. The other one's watching TV, and he's very excited he gets to stay up past his bedtime. I'm like, okay.
Tell him you're welcome.
Auntie Dwania says you can stay up as late as you want.
Right. My nephews know you can stay up late, party all you want, just don't wake me up early the next day. Jadine from Windsor, I know. Jadine I've known for a while from when I was living in Windsor as well too. She does amazing handmade invitations, and her business is See You There Invitations. It's really cool. So yeah, you should check her out if you're looking for invitations, especially for that special occasion or that regular occasion that you want to make special. Yep.
Yeah.
Hi, Michelle from Little Current. So another exciting thing that happened today, I'm just going to chat a little bit, is that I finally pressed approve for the proof for our book.
Yeah, way to go.
It will be launching very soon, actually. Stay tuned before the end of the month. So you'll be able to read stories from 5 entrepreneurs about their journeys. And reading those stories, it was mind-blowing.
It's so inspirational too, because all of your people were immigrants, right? So they literally came here with nothing.
Yeah. I can't wait for everyone to read the book. I can't wait for everyone to see the book. I did do a little sneak on Instagram of the cover, but I will officially put a cover up soon, as well as reveal the contributors to the book. And we'll do a lot of Instagram lives with some of the authors, and we'll try to do some book signings across the GTA next month at all your, oh, you saw the sneak peek, Janine? Yes, I'm excited too. Yeah, so we're going to try to go to a lot of the events that are happening for International Women's Day next month and do some book signings. So that was part of my excitement today. So emails, book launch, and yeah, that hopefully that's enough excitement for the day. And you know, this is where the real fun begins. Because I'm telling you, you better get ready. Shalini is full of a lot of information, and I already have my notepad ready. I'm always ready because there's always something I have to go, oh crap, I should do this. And I'm going to make this promise live in front of everyone. You know what it's going to be, Shalini.
I know what it's going to be.
I solemnly swear I will be on time with all my paperwork this year. I kind of say it every year and I'm dead late every year. Like, and I'm not talking about late by a week. I'm really bad, but I have zero excuses this year. And Shalini, if I don't do this on time, you can call me out on social media. Feel free.
Okay, it's a deal.
Yeah.
If you don't get me this stuff, then I will call you out on it. But
I better
you
get
do have an excuse this year. You need to take care of you and taxes. Like, who cares about taxes?
Well, I mean, I have a little bit more time on my hands.
Fair point. Fair point.
So I should be able to balance it a little bit, but I promise I will get it there. I just need to get past the book, and then I'm going to dedicate some time. So yes. So I'm sure you guys are tired of hearing me speak. The government cares. Good one. Good one. They do care. I don't need them knocking on my door, okay? You know, they don't call you. Don't be scammed by those phone calls. But yes, I am going to stop rambling and I am going to hand it all over to Shalini. I will be running her deck and I'll start sharing my screen. And Shalini, it's all you. Take it away.
Awesome. So, hi everybody. My name is Shalini Dwania, and I'm a chartered professional accountant. And I do this. I do various presentations throughout the year, but this time of year, I like to kind of focus on getting tax ready, as well as just this year specifically for me. And also top mistakes that I see business owners make. Because as much as the government does care about taxes, you as a business owner really need to care about your numbers for a variety of different reasons. And so for me specifically, when I took over the accounting practice from my father, a big part of when I started networking and kind of engaging with people, a big part of that was that people didn't have any place to go to get questions answered. They had an accountant who was doing the filing and said, sign here, please pay me, see you next year, but they weren't getting any guidance. So that is really what you're going to get out of this 1 hour that we have together. It is going to be information overload. I promise you, once you sleep and maybe after a couple of glasses of wine, it'll all make sense. But if you have any questions, I always offer a complimentary post consultation. So don't feel overwhelmed. We're just going to go topic by topic, and the chat is open. So Dwania is going to let me know when we do have questions, and we will try our best to answer every single one. So next slide, please. So this is just my team. As I mentioned, I work with my father. He is both an accountant and a financial planner. And 2019, we won Reader's Choice Award. We actually won the top level, so best accounting firm Mississauga. So that was huge for me. And yeah, so Dwania CPA, if you follow on social media, it's all my face, but there is a team and staff behind us supporting me in what I do. Next slide, please. So we're going to talk about life of an entrepreneur. You know, there's always ups and downs. And so what are some of the common mistakes that I see people making, both from an accounting and tax perspective? So believe it or not, accounting and tax are actually two different things. Accounting is regulated by the Chartered Professional Accountants Association, and tax is regulated by CRA. Depending on the level of business that you're at, the rules are very similar. So we often just talk about CRA, but there's actually a difference. So let's get right into it. Next slide, please. So the question I get asked a lot, How many years of losses can I have before CRA comes knocking at my door with their guns and stuff? There's no magic number. One of the biggest things is you as an entrepreneur kind of needing to assess, do I have a hobby or do I have a business? Now, in both situations, if you're making money, the CRA does want to know about it, and you do have to declare all your worldwide income. So there's no minimum threshold of, a lot of people say 30,000, a lot of people have different numbers in their mind. From a tax perspective, whether you make $1 or $1 million, you need to report it on your taxes. Where the difference is all the expenses that go along with that. If your business is deemed to be a little bit more of a hobby than a business, and so you've got a lot of expenses in there, but it's not really a viable business, that's when CRA can go in, check what your expenses are, disallow expenses, and then reassess your taxes. So when is that going to happen? Again, there's no magic number. In year one, they do expect as a business owner, you're going to have a lot more expenses, startup costs, you're still building your client base. Year two, you're probably still learning, what the heck do I have to do as a business owner? Year 3, 4, probably should start seeing those numbers starting to turn around. And this is where I say to my clients, forget CRA for a moment. If by year 4 or 5, you're still running huge losses, how viable is your business irrespective of the tax consequences? By year 3 or 4, you should start seeing numbers going into the right direction, regardless of anything else. And so, sorry, my son is home, and so here you go.
He has to make an appearance.
They both made an appearance last year. I remember that.
Yes.
So, do you have a hobby or do you have a business? So the CRA definition is any activity that you do for a profit. So the intention has to be a profit. And you might question, well, who doesn't want to make a profit? If you're doing this as a hobby, you probably aren't that concerned about the money part of it. You're probably doing it because you really love to knit and just give out the socks at Christmas time type thing. But when it's a business, you're trying to make a profit. And this is the important part. There is evidence to support that intention. So if you could go to the next slide, please. We're not going to read all this, but the CRA does have this profitability test. And so there's, 12 key main things, but all of that kind of summarizes into, are you working your business? And if you have to question whether or not you're working your business, odds are you're not working your business, because when you're working it, trust me when I say you're working it. But part of it is also, is there a profit potential? Is there a market for what you're doing? So sometimes people have fabulous ideas, but when push comes to shove and they start doing their research, there's just no market for it. So again, business plans, how are you promoting yourself? What are you investing in? Courses? Do you even have the skill set to do what you need to do? All of those are taken into consideration together. There's not one point here that is more important than others. Everything is taken a look at together. And again, this is probably not something that they're going to call you on in year 1, but by year 2, 3, 4 of having a business, this is going to be an issue. And the other thing that's important to note is this is more of an issue if you're running your business as a sole proprietorship, just because the tax impact tends to be a little bit greater. So there's more risk for CRA doing it as a sole proprietorship. So I see some comments popping up. Green, you'll let me know if there's a question, right?
Yeah, I'll check as we go along. Oops, sorry.
That's okay. We're on to the next slide anyway, so we're good.
Okay.
So one of the biggest things I get from business owners is they don't really understand what I do as an accountant, and they don't really understand what accounting even is. So accounting is the process of taking all of your transactions that you incur as a business owner and turning them into your story of your business. So bookkeeping will literally take all of your receipts, your invoices, enter them, and then reconcile. So reconciling just means taking what's in the accounting system and comparing it to third-party statements to make sure we've captured everything. because your numbers tell the story of your business. And if those numbers aren't accurate, or if we haven't captured everything, we're missing out on being able to learn from that. And then, as I mentioned, accounting and tax are actually two different things. So my job as the accountant, as a tax accountant, is to take your accounting numbers and apply tax rules. So if you could go to the next slide, please. This is just very high level, what we call the full cycle accounting process. So you're running your business, you have clients, you invoice the clients, and then you collect payment from them. If they don't pay you right away, you have what we call an accounts receivable. You need to have expenses to run your business. So you go and get some services, they're gonna invoice you. An invoice to the customer is a bill to the client. So remember, it's invoice for me, the business owner, is a bill to my client. And so if they don't pay it right away, you have what we call an accounts payable. So every single transaction is triggering one or both of these functions. And then we want to reconcile that to our bank statement. And this is where, if you use a dedicated bank account or a dedicated credit card, it's really easy to make sure that you haven't missed any transactions. So a big part of what we do in bookkeeping is called reconciling, making sure that all the transactions are accounted for. Then, if there's any accounting principles that need to be applied, we factor those in, make any adjustments. So next slide, please. So this is where, in your business, you might actually need to have both a bookkeeper and an accountant. The bookkeeper will do that first part of taking all the transactions and putting them into an accounting software. Depending on the skill set of the bookkeeper, they may or may not make adjusting entries. And then once a preliminary set of financials are created, the accountant will step in and then do one of two things for you. Prepare internal statements so that you, the business owner, know what's happening in your business. I cannot emphasize enough, if you only do your bookkeeping for tax time, you're missing out on so much knowledge of what's working in your business, what's not working. And by the time April comes around, you're already 4 months into the year, you're missing the opportunity to change your trajectory. Then we're going to take those accounting numbers and do your tax filing and tax compliance. So that is the entire accounting function. A bookkeeper and accountant are basically your left and right hand, both helping you achieve those end goals of financial statements and tax filing. So whether you need both, or you want to do your own bookkeeping and then hire an accountant, or if you're comfortable with the tax system and you don't have a complicated business, file your own taxes. It's all a matter of where your needs are and your budget. Let's be honest, your budget matters too. Next slide, please. So this is one area where a lot of business owners make mistakes, and that is not applying the accounting principles. Now, unfortunately, you went to school to offer your service or your product. You didn't go to school to be an accountant. But as a business owner, you're expected to follow all the accounting and tax rules. So the biggest one that I want to mention is the accrual versus cash basis of accounting. In Canada and in most of North America, we use the accrual basis of accounting. And what that just means is we record the revenue and the expenses when we have incurred the cost or done the work, irrespective of whether cash has been received. What we want your financial statements to reflect is the value of the work that has been done, not the cash flow, because customers may not pay you, some may be on payment plans. You don't want to follow the cash. It's not going to give you a true story of what you're doing. And so the revenue recognition and matching principles basically dictate that you're going to record the revenue or issue the invoice when you've done the work, and then any expenses that you needed to incur to help you do that work, we're going to recognize it in the same period. So for those of you that are January to December sole proprietors, if you did work in December, even though you don't get paid until January, you're going to record the revenue in December as part of your 2019 taxes, even if that client still owes you money. So these are just some of the principles that I see a lot of business owners making mistakes on. And to give yourself the most accurate financial statements, your bookkeeping needs to be done to comply with these principles. Next slide, please. I cannot emphasize enough, your success is not measured by your bank balance. So many business owners go through the heartache of looking at their bank balance and thinking they are failures or, wanting to quit. And the reality is, you got to remember, your business is probably supporting your personal life. So if you draw out all the money from your business bank account, you may not have any money there. But that doesn't mean that your business is failing. It doesn't really mean, your bank balance itself really doesn't mean anything. So as a business owner, you need to have some other metrics of success. So metrics are just a tool or some measurement that you're going to use. It can be the types of clients that you have, for example. In the beginning, you might say yes to anybody who's willing to do business with you because you're like, yeah, client. But believe it or not, as you grow and as you have that client list, having more people that fit into your ideal client bucket versus they pay the bill, I'm going to deal with them client, is a measurement of success. Being able to say no to a client is a huge measurement of success, because that means you're doing well enough that you can walk away from what doesn't fit your purpose.
There's a question here, Shalini, quickly, sorry. Yeah. Someone wants to know, for sole proprietors, if you decide to pay yourself, do you have to enroll for payroll or put your pay as payroll expense?
No. So if you are the business owner as a sole proprietor, basically at the end of the day, whatever your revenues minus your expenses are, is all deemed to be your income. So you don't have to put yourself on payroll. The system itself will calculate the CPP that you owe. EI is the only thing that if you voluntarily want to pay into EI as a business owner, you can. But basically, if as a sole proprietor, you put yourself on payroll, you're just issuing yourself a T4, which doesn't always make sense. So whatever your profit is at the end is deemed to be the same as your salary. Okay, so where was I? So I was just talking about different metrics. So, social media, engagement, reach, even people, saying, hey, I saw your thing on Facebook and that's great. Like, that is all a measurement of success, because the more your brand is being reached out there, the more successful you are. In accounting, there's also something called ratios. They're more important for incorporated businesses, but those ratios also have an element of measurement to them. And so knowing what your ratios are in day one versus in day 101, that can also show improvement in your business. And then other key performance indicators that are important to your business that you think are important to know, measure those, track those. Those are all true reflections of whether your business is successful or not just your bank balance. But in general, there are two numbers that every business owner should know. Next slide, please.
Before you go to next slide, I just want to point out to everyone, you see my flip charts back here? That one at the front actually has my KPIs for the year listed. Everything that I want to achieve. And I break it down monthly, and I write it down for, like, even social media. I'll write each platform and write the number I would like to increase it by. Or for my email list, the number I like to increase it by. Clients, the number I like to increase by. So it's all the first page of this, my KPI with all my goals for the year.
It's also important to mention that your marketing KPIs are going to be very different than your accounting KPIs.
Right.
So marketing folk have their own measurements to track the success of, like, campaigns and SEO rankings and insights and all that fun stuff. Those are different than the KPIs you're going to use to track your accounting numbers. And that's like your sales, your customers, that type of stuff.
I put a dollar value next to everything. I put my number and then my ideal dollar value next to it.
Perfect.
Trying to be better at this. Next slide. There we go.
So the one number that every business owner needs to know is the break-even number. A lot of people get really carried away of projecting what they want. And those projection numbers are great. We'd all love to make $1 million. But before we get to that $1 million, we need to know, how much do we need to sell every single month to just not lose money? And this is especially important for anybody watching that is in product-based business, because your margins are often very small as a product-based business that you really want to make sure you're meeting your targets. So once we figure out what our break-even number is, we're going to reverse engineer that. So if I know to not lose money every single month, I need to have 30 sales. Okay, well, how many leads do I need to have to get to 30 sales? And this might require a little bit of trial and error of understanding your conversion. And certain industries are easier to track conversion than others. But if you know that for every 5 people you meet, 1 becomes a client, then you know you need to meet like 150 people just to get, the 30 sales. And then you just kind of keep working backwards from there. So the break-even number can be done over a week, a month, a quarter, a year, whatever unit of time is important to you. And that is how many sales you need to make to not lose money in that period. So that's the most important, one of the 2 most important numbers that every business owner should know. The second, next slide, please, is your walk away number. It's not something that we like to talk about as entrepreneurs because we want to make sure that our business succeeds and thrives, and hopefully, God willing, every single one of your businesses will. But the reality is some businesses don't, and you kind of need to go into the business with that end number. How much are you willing to put into it before you say to yourself, it's just not viable for me? Because you can have 2 people running the same businesses, one will thrive and one won't. So just knowing this number, I see a lot of people year after year and they just keep pumping money into their business and they're not getting those returns. And then we as entrepreneurs get a little emotionally vested in our business that I gotta make it work, I gotta make it work. What is that number for you where you finally say, enough's enough, I need to walk away? Next slide. So one of the other mistakes that I see a lot of people making is registering their business. And I don't know why they've made it as complicated as they have, but we actually have 2 different registrations in Canada. One is with Service Canada or Service Ontario, if you're just registering in Ontario, where you get what's called a business identification number. And what that means is legally, as a sole proprietor, your name is your legal name. My legal name is Shalini. But if I want to operate my business as something other than Shalini and be able to open up a bank account and enter into contracts using that other name, I need to go get a business identification number and register for something called a master business license. That then gives me the ability to run my business using that name, open up a bank account using that name that is not my legal name. And even if you're incorporated and you've incorporated under name A, but you want to do business under names B, C, and D, even then you would have to go get a master business license. Most corporations don't need to. Usually they're running the business in the same name, but it can happen if you're incorporated as well. The CRA is a different registration. You then get what we call a business number, and it's usually about 9 digits long. And then that CRA business number needs to then be attached to a program account. So just registering a business number does not mean that you registered for HST. You actually have to take it one step further and affiliate an HST account with your CRA business number. And that's a common mistake where people say, yeah, I registered with CRA, but they didn't take it to that next level. And therefore they've been collecting HST without actually registering for HST. And that is a big no-no in CRA eyes. We can fix it, but until you have properly registered, you cannot charge HST. So that's another mistake that I see a lot of people making. So I wanted to talk a little bit about HST. HST is basically what we call sales tax here in Ontario. Across Canada, each province has their own sales tax. So not every province even has HST. Some are still doing PST and GST, so general sales tax and provincial sales tax. For those of you that have been in Canada for a while, or Ontario for a while, we used to have two different sales taxes back. I don't even know when they harmonized it, but even in, I think, the early 2000s, we still had two different sales tax.
Yeah, we did.
And it's just a federal level and a provincial level of sales tax. And that's how the government earns money. They force you, when you reach above 30,000, that you must charge sales tax on your goods and services. But you can voluntarily choose to register and start charging from day one. And the reasons why I say you should do that are very straightforward. One, when you register for HST, as a business owner, your day-to-day expenses, you are also being charged HST on your expenses. Web hosting, business cards, networking, all of those things charge you HST. The way the government has set the system, whatever you have charged and collected on their behalf, minus what you have paid out of pocket for your own HST products, you get the difference back or you get a refund. So for example, let's say I collected $100 on behalf of CRA, but I spent $125 on my expenses paying sales tax. I would actually get a $25 refund. Or if I spent 100 or if I collected 100 but only spent 75, I'd only pay them $25. So with HST, it's a dollar for dollar return on the difference between what you've collected minus what you've spent. If you don't register for HST, you can still claim your expense plus HST on your tax return, but it reduces your taxable income, which just is a percentage based on your marginal tax rate. So there is a financial benefit doing it as an HST remittance versus afterwards. The other reason that I tell people to charge HST is because as people doing business in Ontario, we are used to paying HST on all of our goods and services. So why should you discount your business? And most importantly, if you don't charge HST for your business, unless you're exempt, you are advertising to the world that, hey, I make less than $30,000 in my business, right? And so depending on the type of client that you're trying to attract, they may not want to do business with someone that they perceive to either be new to business or that is making a lower threshold. So unless your plan is to not make more than $30,000 in your business ever, just start it from day one so that your accounting systems, your bookkeeping, all of that can be set up properly from day one. Are there cons to registering for HST? Of course. Your bookkeeping needs to be done in a way that now separates out the HST from the core expense, and it is a separate HST remittance filing. So it's not done on your tax returns, it's actually one additional filing. But believe me when I say, of all the CRA filings that there are out there, the HST filing is the easiest. A lot of people get really scared of a CRA audit, and yes, they do audit sales tax as well as your regular expenses. As long as you know what you've been doing are legitimate business expenses, you have no reason to fear an audit. Be annoyed with an audit? Sure. No reason to fear it.
There are a couple questions here.
Okay.
Someone wants to know, can you explain about when a sole proprietor can collect EI?
So when you are self-employed, because you're not doing typical payroll, you don't have CPP and EI being taken off of your paychecks. You actually have to elect into paying EI, and no one I know has ever actually done it, so I'm not too familiar with the actual process, but there is some paperwork that you would fill out and then just make installment payments to CRA specifically for your EI, so that should you go on mat leave or should you be injured and qualify for something that EI could pay out, then you could go apply for EI. Having said that, for anybody who's gone through the EI process, it's not exactly an easy process. It's not a lot of fun. And depending on what you're going for, you don't get a lot out of it. So a part of the conversation needs to be, should you just put that money aside and perhaps invest it, or even put it into a very glorious savings account that earns you something versus giving it to CRA in hopes that you never need to use EI. But so whether if you feel EI is something that you really want to pay into, we can have that conversation. But in my opinion, putting it away for a rainy day and having it grow in some sort of investments is kind of a better use of your money for those rainy days.
The other question is, which should they get first, a BIN or a BN?
Totally depends on your needs. You can do both at the exact same time. The BIN, the business identification number, is really only important if you're going to operate your business as something other than your name. So then you definitely need to have a BIN so that you can go and open up a bank account and even have the contracts in that name. Whereas a business number, equally important, but a very different process. So just do both at the same time and you've got them both covered. There is not one or the other. They both serve a very different purpose depending on what your business needs are.
Janine, I don't know what you meant, but it says, but you can't go back once you start collecting EI, right? I'm not sure if you want to expand on that question.
Do you mean collecting HST, maybe?
I don't know. It says EI.
Okay.
And yes, you can get a copy of this as a replay. We'll have it up to everyone shortly. And you answered this question already. Register for your HST even if you're making less than 30K. Yes.
So you can voluntarily elect to start charging HST below 30,000.
Okay, those are all the questions for now.
Okay.
So, next slide, right?
Yes, please. Oh, and just one last tip, if you are collecting HST, put in a separate bank account. It's not yours to spend, and I can't tell you how many times people get so used to having HST refunds because their business has perhaps been in a loss position, and that first time that they owe money, they're scrambling. So just put it aside, separate bank account until you know you don't need it. So, tax planning. What the heck does tax planning even mean? Doesn't mean I'm going to plan to file my taxes. There's more to it. So, as a new business owner, the first and few things, if you're a sole proprietor, is should I incorporate my business or not? If you go to an accountant and they tell you, yes, you should incorporate without asking you any questions, run. Because a lot of accountants like to tell clients to incorporate because a corporate return is more expensive than a sole proprietor return. There is a reason to incorporate, and those reasons need to apply to your business. So whether or not it's a fit for you and how you're operating is part of tax planning. Once you have incorporated your business, things to talk about are, should we pay yourself a salary or a dividend? And I'm going to explain the difference in the next slide. We talk about ways how to defer taxes. So what a corporation really and truly is what we call a tax deferral vehicle. And as long as you can keep money in the corporation, you can achieve tax deferring. And so a corporation can hold assets. A corporation can also buy you insurance. So part of the conversation that we need to have is understanding why you're taking the money out of the business to begin with, and what can we then safely say the business can pay versus, yes, you need to take that money out. So how do we defer the taxes? And then, of course, everybody loves to understand what can I write off? And that applies to sole proprietor or incorporated. Are you claiming everything you can? And it, in some cases, involves a little creative accounting to not mess over CRA, but to structure things in such a way that can trigger a write-off that otherwise perhaps would not be a write-off. And there are ways to do it all legally and supportable to CRA. So next slide, please. So what I wanted to just explain here, and unfortunately I don't have the mouse so I can't control this, but the very top line, this is a snapshot of a personal tax return. So I wanted to explain and help you understand how our tax system kind of works. So when you work somewhere, you get what's called a T4. They give you a T4 slip. And so that would go on that top line that says net employment earnings, okay? When you are self-employed as a sole proprietor, that profit or loss goes down at the bottom where it says self-employed income. So whatever your total income is adds up all those lines above it. When you're incorporated, we can pick whether to give you a T4, which is net employment earnings, or a dividend, which is in the middle there. Now, these are actually taxed differently. And so what the system does is it takes your total income and takes each category of expense of income and applies the appropriate tax rate. So for self-employed income and net employment earnings, they're kind of treated the same as earned income. So when you have those losses that we were talking about earlier, it brings down your total income, especially if you're working somewhere else. So that's why CRA really wants to see that profit there, because they want your total income to be as high as possible and not have perhaps artificial expenses bringing that down. Next slide, please.
Before we advance, is there a recommended percentage that we should take out of the business for our wages?
Next slide, please.
Oh, okay, 1 second, wait, before we even do next slide, there might be another one. It says, can you cover bonuses as well?
So your bonus, whenever you get issued a bonus, it goes onto your T4 and it gets added to your income, just depends on which year you pay out the bonus. So that is another benefit of incorporating, is we can actually structure when you get paid that bonus and which year we want it to hit in, especially or only if your corporate year is not the same as January to December. And we often tell our clients, don't have the same calendar year as your fiscal corporate year, because that's part of tax planning. Which year do we want to have this hit your income?
Got it.
So this is our marginal tax rate system. So the way that it works in Canada is that each chunk of taxable income, which is that first column, has a specific percentage associated with it. And we have both provincial level taxes and federal level. So this is just Ontario 2019. So when you ask, how much should I guesstimate for taxes, you kind of need to know how much total income you're expecting. And then you're going to go to that respective bracket and go to that first column, which says interest and regular income. And roughly that's the percentage of tax that you can expect to pay. It's not a straight A times tax rate equals taxes earned, because like I said, each chunk that you see is going to be taxed at that rate, but that gives you that ballpark number. So a lot of people have this 30% number in their minds. And that's because if you look at this chart, between $47,000 and roughly $87,000 is in that 30% rate. Now, going back to tax planning, if you take, just as an example, the, let's say 47 to 77% bracket, interest and regular income is 29.65%. But if you follow that all the way across and you see eligible Canadian dividends, it's 6.39%. So dividends are more favorably taxed. They're taxed a bit lower. There's some taxes taken off at the corporate level, so it's not exactly as equal or unequal as it appears here, but typically dividends are taxed a little bit less than salary, and there's no CPP and EI component, but a dividend is not considered earned income. So if, depending on your needs, we need to make sure that that tax planning is meeting your needs. And so that is a big part of the conversations that I have with my clients is, why do you need to show a certain type of income? And then how can we achieve those same goals regardless? But back to the question that you had asked, just again, figure out what your taxable, your total income is going to be-ish, and go across to the first column, and that's your, how much you should be saving in anticipation of taxes.
But what about how much you should be paying yourself? Like, what's usually a good percentage?
See, the problem is that is something that just depends on how your business is doing, right? If there's no money in the business to pay yourself, then there's nothing to take out. Some people have a much more lavish lifestyle than others, so their needs require a higher salary than somebody else who's a bit more frugal. So there's no magic number of how much you should pay yourself. As a sole proprietor, whatever your profit is deemed to be salary. So there is no concept of paying yourself anyways. When you're incorporated, that's part of tax planning, to understand what do you need the money for, how much can you really truly leave in the business, and then we kind of, I don't want to say I tell you how much to pay yourself, but part of the tax strategy might be saying you're going to live within X dollars so that we can achieve these other goals that we have. But as a sole proprietor, that concept of taking money out doesn't even really apply, because your entire profit is deemed to be your salary. So what are some reasons to incorporate? For the most part, there's legal reasons to incorporate. Being a separate legal entity offers some protection of your personal assets against those of the business. But tax deferral, as I talked about, if we can leave money in the corporation, those are reasons to incorporate, because then you don't pay those taxes until you take the money out from the corporation. If you have a business that perhaps has multiple owners, multiple investors, having a corporate setup allows you to give different people different rights based upon how much they've invested, based upon whether there's like a silent partner or an active partner. There's different things that can be done as a corporation. You can achieve some of those with a partnership and a really good partnership agreement, but a corporation just allows the transfer of even investors who want to buy and sell. It allows them to do so more easily. If you need funding, unfortunately, a lot of lenders want to do business with only a corporation. BDC, the banks, are notorious for not even really looking at you unless you are incorporated. And then, like I said, some other reasons are legal or future plans. If you want to pass that on to your children, or if you want to sell your business, doing so as a corporation is often easier. Next slide, please. So in general, CRA says your revenue is any income that you do from any activity to earn a profit. So the key there is that you are trying to earn a profit, and revenue, as I mentioned already, is recognized when you do the work, irrespective of cash flow. Next, please. So these are just some types of income that you might incur. So your sales, if you have commissions, if you charge any fees, professional incomes. A big one that takes people by surprise is even bartering. So bartering just means that you do something in exchange for another product or service. You don't exchange cash. But CRA still says there's a value in what you're doing, and you need to record that value. So in a true situation, you probably would not be giving away your product or service unless you were receiving something of equal value in exchange. So my opinion is to not do a legitimate barter, but to actually issue an invoice for your work, get payment, get a bill from them for their work, make a payment. So have the cash flow, follow your proper accounting system so that you don't run into any other issues. But if you do happen to be in a situation where you're exchanging services with another person in lieu of cash, you still recognize the revenue and the expense. So the net difference really should be zero at the end of the day. But remember, our financial statements are trying to reflect the value of the work that we've done, not the cash that we have received.
I have a question here.
Yep.
It says, my business is currently a sole proprietorship. I'm thinking of moving to a social enterprise status. Is this something you can offer any information on?
I have no idea what a social enterprise status even means, to be honest with you. Legally, there's only incorporated or sole proprietor as a legal and tax status. There is a subsection of corporation called a not-for-profit organization, which follows a separate set of rules. So I'm not entirely sure what you mean as social enterprise status, unfortunately. Sorry.
No, it's okay. I think it's close to, I'll let them. Oh, someone has something to say in the chat here. Social enterprise is like a nonprofit.
Oh, okay, so not-for-profits, again, can be, you have to register that with CRA. You can incorporate a business as a not-for-profit. The tax rules are very different. They actually have a different set of filings to do. They have a different set of accounting principles. So one of the biggest challenges for not-for-profits is actually finding people to support their not-for-profit activities, because not a lot of accountants will even touch not-for-profits, because like I said, it's a different set of regulations, a different set of tax filings. And therefore, when you go to the bigger companies, it's a bit more of an expensive cost. But I personally, at the moment, don't deal with not-for-profit, so I don't have too much information other than it is a separate set of filings. It's a specific type of registration that you need to apply to CRA to get not-for-profit status. It's a little more regulations because they want to make sure that you're actually, to get those tax benefits of not-for-profit, they really scrutinize whether or not you are complying with all the rules. If you're getting funding, those fundings need to be treated a specific way on your financial statements so that also the funders know that you're using the money for the intended purposes. So it's not something that I would go into lightly. Really understand the accounting and accountability behind not-for-profit status.
The next slide.
Yes, please.
Okay.
So CRA says that a business expense are certain costs that are reasonable for a particular type of business and that are incurred for the purposes of earning income. How vague is that? I always say the Tax Act is 50 shades of tax because what's reasonable to one person may not be reasonable to another. And so how do you judge that? Some people are just more aggressive than others. Some are more conservative. So my rule of thumb that I tell anybody that asks me the question, if you had an employee and they wanted to get reimbursed for that expense, would you reimburse them? Because if you wouldn't reimburse them for that expense, odds are it wasn't truly a business expense. So the dialogue always has to be, how did it help you earn income? And so there's not necessarily, most of them don't come with a hard and fast rule. Some of them do have criteria behind it, like business use of home or business use of vehicle. But for the most part, it is a judgment call. Some of it has to do with the person that audits you. So let's take that even one step further. When you file your taxes itself, we are on what we call the honor system. So CRA does not audit you as soon as you click file. Whether or not you ever get audited in your entire existence as a business, it may not happen. So a lot of people, when they're talking to other business owners and they hear all these really, really fun stuff that they're writing off, it's not that CRA has said, yes, you can write this off because we like you more than we like somebody else. It's just that they haven't gotten asked about those expenses yet. So a part of this is also understanding what your own risk tolerance is as a business owner when you are talking about an expense that's kind of on that gray area of the Tax Act. So next slide, please. These are all the different categories of expenses. So CRA basically says these are the types of expenses that we would expect a business owner to incur. Just because you're a business owner does not mean that you have extra credits or extra deductions, but you are running a business and therefore you are going to incur some expenses that somebody who's just working a 9-to-5 job is not going to incur. These are those categories. Now, if you put something in the wrong category, there is a $5,000 fine and 30-day jail term. I'm joking, totally joking there. That is not true. CRA doesn't care if you put something in the wrong category because it doesn't.
Heart attack, because when I'm filling this stuff out for you, I'm usually like, oh my gosh, is this right? Is this right?
See, accountants can be funny. No, there is no penalty because you put something in the wrong category, okay? Because whether you put it under advertising or office expense, at the end of the day, your number is the same. As long as you meet the criteria for it to be an eligible expense, and that goes back to that definition on the previous slide, CRA will allow it. Now, certain categories require a bit more documentation than others, and those are more specifically like your assets. If you have assets, equipment, machinery, your business use of vehicle needs the log. So there are certain things that require a bit more documentation, but by and large, most of these categories, whether you put something under advertising or office, it doesn't really matter to CRA. Why it should matter to you, the business owner, is when you're looking at your financial statements to understand your numbers. So just one, be consistent. If you're gonna put networking under advertising, then all your networking should be under advertising. Don't have some in advertising and some in like office expense. When you're doing your taxes or when you're doing your bookkeeping, it doesn't matter what industry you're in, we all fill the exact same tax return. So your main headings should be these categories. And then use subcategories to track and measure what's important to you as a business owner. And then, like I said, be consistent. So some people, I tell them, if you have a budget, where would you want these expenses? Which budget would you want those expenses to be taken out of? And just bookkeep to your budget so that you can do those budget to actual calculations. I don't have time to go over every single category, unfortunately. I do have my own webinar coming up where I literally take you through A through Z of all of these categories. If that is of interest, I'll have Dwania share that after the fact. Next slide, please. So, some tips. Keep all your receipts. CRA does not allow credit card statements or bank statements as support. Why? It's the details of the receipt that support the transaction. You can say you have SO $80 on your credit card, but how do I know you didn't go buy $80 worth of scratch tickets? It's only the receipt that's going to prove what you purchased and therefore be able to prove that you made that purchase for business purposes. These days, there's an app for that. There's lots of different apps that have come out to talk about or to take pictures for you. My only advice is, where are they storing that information for you? So I personally use HubDoc, HUBDOC. It's $300 for the year, but it has the ability for me to back it up to another place. So I have mine backed up to my Dropbox. So I take a picture. Yes, it's stored in HubDoc, which my bookkeepers have access to do my bookkeeping, but it also gets backed up to my Dropbox. So if I ever say, bye-bye HubDoc, I don't lose all of my pictures. Whereas some of the other softwares, like I know Wave has an application, I think FreshBooks, QuickBooks Online for sure does. But if you ever leave that program and go to another platform, how do you extract those pictures? And the photos are support for CRA purposes, so you can totally throw out those receipts after the fact. As just please make sure the picture is readable before having your bonfire, because we want to make sure that if you ever needed to use that as support, it's clear. Photocopies are not support for CRA because they can't see the full outline. So just make sure you use like the photo app or like a proper scanner so they can see the outline of the picture. But when you photocopy on those big machines, they just can't see that did you cut something out unless it's very obvious that that is the full receipt. Keep personal and business separate to the best of your ability. And a lot of people struggle with this, especially when they're incorporated. So if you have a business account and a personal account, which regardless of whether you're a sole proprietor or incorporated, you can open up a separate bank account, put the money into your personal, and then pay your personal bills from your personal account. So we only see one transaction going between your business and personal to transfer money. Where it gets messy is when you're just using your business account and swiping for your personal expenses. We have to, especially when you're incorporated, we have to be able to reconcile every single transaction. And that will add to your bookkeeping cost if every single personal transaction we're now flagging and questioning for you. Meals and entertainment, highly, highly audited account. Keep your itemized receipt. Write on the back who you met with, what their business was, or what the business purpose of that meeting was. Because should you ever get audited and 5 years later you're trying to remember, who did I have this coffee with? It's documented on the back of the receipt. And for your automobile, you are required to keep a log of where you went, business purpose, and the number of kilometers driven. Yes, there's apps for that. Mile IQ is one of the more popular ones. I find apparently apps don't work that well if they're not on. Who knew? So I prefer Google Maps. And you can just treat yourself to like a shot of tequila for every address that you put in there. Make a fun night of it, whatever works for you. But if you ever get audited for travel, for automobile, they will ask for the log. Next slide, please. These are just some CRA red flags. We've talked a lot about most of these, but having discrepancies across your form. So if you are registered for HST, you are filing a separate HST remittance. The total revenue that you report on your HST remittance should probably match the total revenue that you file on your taxes, right? So just being consistent in your reporting, being an outlier, what that means is, so when you file your taxes, CRA does have what we call an industry code. So they do know what the average accountant or average you is making. But most importantly, if you say you're living in like $1 million income area and on your taxes you're reporting like $10,000, well, you're an outlier also of your demographics. So they might flag you just because they're seeing that the average person to afford that area is showing X on their taxes. Why aren't you? Really large expenses, especially in proportion to the income. Again, that in itself may not mean that there's something wrong. The first few years, you might be trying different advertising, trying different things, but there should be some element of return on that investment before you go expense happy. And the rest of there is pretty straightforward. Family on payroll, I get that one a lot. You can absolutely pay family a fair wage for what their skill set is. So just because your nephew is really great, Dwania, you can't pay him to do your bookkeeping unless he's qualified to do some of those transactions for you. Sorry. But then of course you'd be paying them and they'd have to declare that as income. So there's an element of tax returns there. If they're an employee versus contractor, those decisions need to be made. But absolutely, if you have family that wants to be involved in your business, that's a different conversation altogether, should you have them involved. But if you're going that route, you can absolutely pay them to help you out. Next slide, please. That's it, we're done. So next steps. I know that was information overload. I'm sorry, there's just always so much that I want to say, and Dwania says I have to wrap it up within an hour, so I go really fast. So I'm offering anybody here who has questions a 15-minute conversation with me just to clarify anything. I am taking on new tax clients this year, so if you are looking for an accountant to help you with any of these areas, book an appointment to meet with me. If you're interested in learning more about the categories of write-offs, I have a webinar coming up on February 27th. You can use the promo code LOVETAXES until Monday to get $20 off. And that too will be recorded, so you will get a replay to watch it as well. And we have time for some Q's and A's, so if there are any questions, I don't know if there are.
I know we had, one second, we had questions in between, but I will send everyone this link along with the link for the small business write-off deduct this workshop and the promo code. So not to worry, I will send all that. I'm going to look to see if there are any more questions. Can you throw the paper receipt away after taking a photo?
Yes, you can. Have a nice bonfire with all those receipts that you don't, like I said, just make sure that the picture you've taken is very clear so that you can read it, in fact. And ideally, whatever system you use has another backup so that if that particular, if HubDoc ever goes out of business, I still have it backed up in my Dropbox. Because you can't blame the fact that that system that you're using is no longer in business for not having it. Okay.
I highly doubt the answer to this is yes, but someone said, are you suggesting that sole proprietors should incorporate? No, she never said that. She said to talk to your accountant.
There is always pros and cons to incorporating. You need to know and understand what those pros and cons are. It is never a blanket statement. And that's why I said, if you go to an accountant and they, without even taking a moment to converse with you and really explain to you what your role and responsibilities are, once you're incorporated, run. Because there's pros and cons to doing so. There's reasons to do it, reasons not to do it. And you need to really understand what you're undertaking should you choose to incorporate. Because basically, when you have a baby, you get a birth certificate. When you have a corporation, you get articles of incorporation. You, the shareholder or the parent of that corporation, are responsible for its well-being. And that comes with a higher level of responsibility than what you have as a sole proprietor. So you really need to understand what you're getting into before you do it. So no, there are many people that are sole proprietors that I say stay as a sole proprietor because it doesn't make sense for you to incorporate.
Perfect. I think that's all the questions. No, I'm lying. Someone just, hold popped up with one here. Sometimes I pay contractors to help me with projects. Is there a benefit to paying them an honorarium or have them invoice me?
Always get an invoice. The honorarium thing is more for like somebody came in and did like a speech, like a guest speak for you, or they volunteered to do something for you. So you just want to kind of pay them in kind, or as a nice gesture, a thank you for the thing you paid them. But if you have a contractor who's legitimately doing work, you want to get an invoice from them. You want to, if they're charging you HST, you want to make sure they have their HST number on that invoice, and you want to pay them via an invoice system, because otherwise you have no proof for the work that they've done that you want to write off as an expense. So in general, honorariums are not very, we don't see a lot of those to support our expenses. It's like I said, somebody, you're doing an event and you've had that keynote speaker who didn't charge you, but you want to pay them something in honorarium as a thank you for spending their time with you.
I think that's it for questions right now. But if you do have more questions for Shalini, remember she does have that 15-minute consult. So I will send out the link to everyone for that. We will also have the replay ready and available by tomorrow. And I'll send the link out to everyone. Thank you, Shalini.
Thank you for having me. And I hope I didn't scare everybody. Trust me, taxes can be fun.
And she's fun. I mean, seriously. So I know she makes taxes fun. I mean, I listened to the whole thing. I wrote down some notes and I made some promises that I hope to keep.
There you go. Well, we'll do a Facebook Live when I've done your taxes and be like, she did them.
Oh my gosh. Have a great, can you repeat the address and email? So I will send everything to you. If I have your email address, if you have registered for this webinar, so I will send you an email, look in your inbox tomorrow. You'll get an email with the link to how you can contact Shalini, the link to the Deduct This workshop, along with a promo code, and the link to rewatch this. And you can always find it on our YouTube channel, Canadian Small Business Women, so subscribe to that. All right. Thank you, everyone. It has been a lovely Wednesday. I can't believe the week is coming to an end already because I feel already busy in my head. And I hope we can be productive. I've been saying to bring all our January energy into February. January, when you have all this energy and you're gung-ho to do new things, bring it into February and be productive as well. So yeah. Thank you. Thanks, Shalini.
Thank you, as always.
Have a good night.
You. Bye.